Most people don't avoid investing because they're lazy. They avoid it because they're scared of doing something wrong. One bad decision, one wrong stock, one mistake that costs real money. That fear keeps people on the sidelines for years while inflation quietly eats their savings. Here's what no one tells you. You don't need confidence to start investing. Confidence comes after you understand the basics. Investing isn't about guessing winners or watching markets all day. It's about learning a few simple rules and letting time do the heavy lifting. And those rules are much simpler than the internet makes them sound. In this video, I'll walk you through investing from the ground up, assuming you know absolutely nothing. No complicated terms, no pressure, just a clear path to get started safely and intelligently. If you've ever felt investing wasn't for you, this will change how you see it. Why most beginners never start investing? Most beginners don't avoid investing because they don't want to grow money. They avoid it because everything feels overwhelming. Too many options, too many opinions, too much noise. So they wait, and waiting feels safe. But in reality, waiting is quietly risky. Because while money sits still, prices move up. That's inflation doing its job. The biggest mistake beginners make is thinking they need to understand everything before starting. You don't. You only need to understand a few core ideas. Everything else can come later. Investing is not about being perfect. It's about starting correctly. What investing actually is, at its core, investing means putting your money into things that can grow over time. That's it. You're not gambling. You're not predicting the future. You're not competing with professionals. You're becoming a partial owner of businesses or assets that produce value. Over time, that value tends to increase. When people lose money, it's usually not because investing is broken. It's because they chased hype, rushed decisions, or invested money they couldn't afford to leave alone. Good investing is boring, and boring is exactly what beginners need. The first rule: don't try to be smart. This sounds strange, but it's true. Beginners don't lose because they're not smart enough. They lose because they try to be smart too quickly, picking individual stocks, timing the market, jumping in and out based on headlines. That's not beginner behavior, that's advanced behavior done badly. The smartest move early on is simplicity. Broad, diversified investments reduce risk automatically. They don't depend on one company or one decision. They spread your money across many businesses. You don't need to outsmart the market. You need to participate in it. How much money you actually need to start? Here's a relief for most people. You don't need a lot of money. You don't need thousands. You don't need a perfect income. You don't need to wait for the right time. You can start with small, consistent amounts. What matters more than the amount is the habit. Investing works because of time and consistency, not because of one big move. Starting small is fine. Starting late is expensive. The best time to start is when you understand the basics. The second best time is now. Why consistency beats timing every time? Beginners often ask, is now a good time to invest? Here's the honest answer. There's never a time that feels perfect. Markets go up, markets go down. Headlines change daily. If you wait for certainty, you'll never move. That's why consistent investing works so well. You invest regularly, regardless of what the market is doing. Sometimes you buy higher, sometimes lower. Over time, it balances out. This removes pressure, it removes guesswork, and it removes emotional decision-making. Consistency protects beginners from themselves. The role of emotions. Let's talk about fear for a moment. Fear is normal when you start investing. Seeing numbers go up and down can feel uncomfortable. That's okay. The problem isn't fear. The problem is reacting to fear. Beginners who succeed learn one thing early. Short-term movement doesn't matter if the plan is long-term. They don't panic over daily changes. They zoom out. Investing rewards patience. It punishes impatience. If you can stay calm while others panic, you're already ahead. What you should ignore as a beginner. This part is important. Ignore anyone promising fast profits. Ignore anyone guaranteeing returns. Ignore anyone making investing sound like a shortcut to wealth. Those messages are designed to excite, not protect you. As a beginner, your job is not to maximize returns. Your job is to minimize mistakes. If you do that, growth will come naturally. The real goal of beginner investing. The real goal isn't making quick money. It's building confidence. Confidence comes from understanding what you own, why you own it, and what to expect. Once that confidence is there, investing stops feeling scary. It becomes routine, predictable, almost boring. And that's when it starts working. How to choose your first investments without stress. This is where beginners usually freeze. Too many choices, too many opinions, too much advice coming from every direction. So let's simplify it. As a beginner, your first investments should do 3 things. Spread your risk. Require very little decision making. Let you sleep peacefully at night. You're not trying to be clever here. You're trying to be consistent. That's why diversified investments make sense early on. They don't depend on one company, one sector, or one prediction. If one part struggles, another part carries the weight. This removes pressure. And pressure is what causes bad decisions. When investing feels calm, you stick with it longer. That's the real win. Why doing nothing is often the best move. This part surprises most beginners. Once you invest, the smartest thing you can often do is nothing. No checking prices every hour, no reacting to headlines, no panicking over short-term drops. Markets move. That's normal. If you react to every movement, you turn investing into emotional gambling. People who lose money usually trade too much. People who build wealth usually wait. Patience isn't passive, it's strategic. When you give investments time, compounding starts doing work you could never do manually. That's why long-term investors outperform most short-term traders. How to think about risk as a beginner. Risk sounds scary, but let's put it into perspective. Risk isn't investing. Risk is needing money before your investment has time to grow. That's why beginners should only invest money they don't need immediately. Your emergency cash stays separate. Your investing money gets time. Once that boundary is clear, investing feels safer. You're no longer worried about short-term drops because you know you're not forced to sell. Time becomes your protection. The longer your timeline, the lower the real risk. What progress actually looks like in the beginning. Let's reset expectations. In the beginning, investing feels slow, almost boring. You won't see dramatic changes, and that's fine. Progress at this stage is not about big gains. It's about building the habit. You're learning how markets move. You're learning how you react emotionally. You're learning how to stay consistent. Those lessons are worth more than early profits. Most people quit before this phase ends. That's why they never see results. The ones who stay don't feel special at first, but time rewards them. Mistakes beginners should expect. You will make small mistakes. Everyone does. You might buy at the wrong time. You might worry too much. You might overthink things. That's normal. What matters is avoiding big mistakes, panic selling, chasing trends. Investing money you can't afford to leave alone. Small mistakes teach you. Big mistakes reset you. If you stay disciplined, mistakes become part of the learning process, not something that stops you. When investing starts to feel normal, at some point, something shifts. You stop checking prices daily. You stop stressing about short-term moves. You start trusting the process. That's when investing becomes boring, in a good way. It turns into a routine, something you do automatically, something that runs quietly in the background of your life. And when investing becomes boring, it becomes powerful. The bigger picture beginners miss. Investing isn't about getting rich fast. It's about not staying stuck. It protects your future self. It gives you options later. It reduces financial stress over time. You don't need to be perfect. You just need to start with clarity and stay consistent. That's how beginners turn into confident investors. If this video helped make investing feel clearer and less intimidating, support it with a like. It helps practical, beginner-friendly finance content reach more people who need it. Share it with someone who keeps saying they want to invest but never starts.